Consumption is a human economic activity in order to meet needs, and this activity will reduce or deplete the use value of a good service. Example of reducing use value include using mobile phones, using computer and watching television, while an example of spending the use value of an item is drinking coffee and eating snacks. The purpose of consumption is to meet human needs, obtain satisfaction and enjoyment, and maintain survival. Factor affecting consumption. The first factor is income. The second is the price of goods and service. The third is the level of education. The fourth is number of family members. The fifth is gender. The sixth factor is taste. And the last is custom.
Saving is basically part of the income received by the community that is not used for consumption, or in other words, saving is the difference between income and public consumption. Saving is only done when consumption and taxes are less than income. Factors affecting the savings rate. Number 1, the amount of income received by the community. The greater the income received by the community, the greater the effect on consumption and savings. Number 2, interest rate. The higher the interest rate, the more people are interested in saving their money in the bank. Number 3, inflation rate. If inflation occurs, the government will raise interest rates to make people save and control inflation. Number 4, awareness and desire. Public awareness about saving, of course, using an educational approach. Connection, consumption, and saving. When someone earns income, they will do these two things, namely for consumption and savings. Consumption is influenced by the amount of income described in the concept of marginal propensity to consume, or MPC, and average propensity to consume, APC. MPC is the ratio between additional consumption due to additional income, which describes how big changes in consumption are due to changes in income. APC describes the average level of consumption, where the level of consumption is compared to the level of income. MPS, or marginal propensity to save, is the ratio between additional savings due to additional income. And APS, or average propensity to save, describes the average saving rate, where the saving rate is compared to the income level. It can be concluded that the higher the level of consumption, the lower the level of saving.
Consumption function and saving function. Income can be asked for the things, namely consumption and saving, so that it can be written in a equation: Y equal to C plus S. Information: Y equal to revenue, C equal to consumption, S equal to saving. Consumption function. Consumption curve feeder has a positive slope direction. The consumption curve has a positive slope is that the relationship between G and C is unidirectional. When income increases, consumption will also increase. The starting point of the consumption curve is above 0.0. The relation is that consumption cannot be zero, namely because there is an autonomous consumption value, that is the consumption value when a person's income is zero. When its consumption curve intersects with the 45 directed line, it means that at that point a consumption balance is reached Z equals C. This condition also has another name for break-even income or BAE. To find out the value of income when index is struck the formula C0 MPS. In general, consumption behavior can be description be the following equate. Number 1, C equals C0 plus MPC Y minus TX plus TR. Number 2, C equal to C0 plus MPCY. Number 3, C equal to A plus MPC. From equation 1 to equation 4 actually had the same variable component, only different rating symbol information. C0 equal to exogenous consumption. Autonomous consumption is the value of consumption when income is 0. MPC equal to marginal propensity to consume, that is the change in the value of consumption when a person's income changes. MPC values are in the range 0 to 1, and the NPC the calculator formula is Y equal to income, TX equal to tax. Tax are deductible, meaning that the higher and tax, the lower the value is income for consumption and vice versa. Transfer payment. Transfer payment can also be referred to as social benefit. The value of the transfer payment is incremental. So the higher the transfer payment, the higher the consumption, and vice versa. In the theory of the consumption function, also known as the average per person to consume APC, that is, the average consumption which APC can be determined from C per Y. Saving function. Saving curve feature has a positive slope duration. The saving curve and has a positive slope in that the relationship between Y and F in unidirectional. When income increases, consumption will also increase. The starting point of the saving curve is below 0.0. The reason is because consumption will not be worth 0 even short income is a value of 0. So when this condition occurs, the money used for consumption comes from saving. Therefore, the value of saving minus C0. When the saving curve intersects the horizontal axis and is the parallel to the intersection of C and D, it means that at the point the saving balance in the ratios. In general, the saving function can be described in the following equation. Number 1, L equal to minus C0 plus MPC Y minus TX plus TR. Number 2, L equal to minus J0 plus MPC Y. Number 3, L equal to minus A plus MPC Y. Number 4, L equal to minus A plus 1 minus B kali Y. From equation 1 to equation 4 actually have the same variable component, only different rating symbol. Information MPS, marginal propensity to save, that is the change in the value of saving when a person's income changes. The MPC value is in the range 0 to 1. The MPS calculation formula is the delta S per delta Y. In the theory of the saving function, also known as the average propensity to save, that is the average saving which APS can be different from S per Y.
The factor that
influence consumption function, and income law savings. Functions are important factors that affect small amounts of consumption and savings. There are several factors that influence the function of consumption and savings, among other things. The economy. For the economy is good, stable, and free employment will foster a tendency to develop a high degree of consumption and save money. If economic conditions are bad, unstable, and many unemployment, people are conscious about consumption and how to save money. Interest rates. In high interest rates, people choose to save money and not to shop. It is because people will get grand bargain. If interest rates were low, people would be more active in shopping than in saving, because the interest they get from savings will be meager. Riches. Property belonging to a household that has sufficient or excess possession usually has least active savings and prefers consumption. However, some domestic fuels do not have enough wealth to save and reduce consumption. Income distribution. To communities that distribute inequalities in income, the amount of saving is generally higher. This is because income distribution inevitably affects communities getting high income, whereas those getting low income tend to make ends meet for consumption. For the high-income communities, savings tend to be high. Moreover, for a society that districts equitable revenues, saving will be small compared to consumption. The cost-effective culture. Every society has different ways and cultures to use its revenue. There is a group of people who prefer to consume, and some prefer to save for the future.